morning. You've tuned into ET Now. This is Buy Now, Sell Now. I'm Karunya Rao. With me is Varun. Right, and like we flagged off at the start of the show, the markets are looking very strong. Sensex and Nifty, both the benchmarks right now are trading at the day's highest point. Nifty is up by 131 points. Sensex is climbed close to 400 points as we speak. Broader markets are also equally enthused right now. You have mid-cap climbing about 1.1%. Small cap is up 1.2%. So, the breadth of the market is looking very, very buoyant and upbeat. Barring some names from the pharma index, you have a fairly firm and fairly green looking market right now. Nifty Bank is up close to 2% as we speak. Nifty Metals has surged further. It's now up by more than 2%. You have private sector lenders, private banking index, which is up 1.9%. PSU banks are looking very good. You have the auto pack as well looking very, very cheery in trade. It's up 1.3%. Let me flag off some individual names from the benchmark index. Most of them, as expected, are firmly in the green. You have IndusInd Bank speeding up big time, up 4.5%. M&M continues to soar as well. It's up close to 4%. Hindalco is up 3.5%. HDFC Bank, we had that trigger as well coming in the form of Q1 update. The stock is up 3.2%. JSW Steel, Tata Steel, two more heavyweights from the metals pack which are aiding the market big time. UPL is looking very upbeat as well. Tech Mahindra, Vedanta, Tata Motors and Bajaj Finance and BPCL, Reliance. These are some stocks that are gaining in the excess of 2% each at the moment. All right, thanks for the COVID update as well, Varun. But let's switch gears and talk once again about the markets. Chetan Nair says V-shaped recovery will continue. Pankaj is standing by with more details from his note and his views as well. Pankaj, what are the key highlights?
Well, let's talk about a very interesting report coming in from Morgan Stanley. It's the third update on the global recovery that they are giving to their client, and they continue to maintain. Chetan Nair, of course, who's the global economist, maintains that recovery globally seems to be pretty strong, or the data which is coming in, especially from US, especially from Euro area, seems to be on the positive side or indicating towards a recovery. Now, their base case scenario is there will be a V-shaped recovery, especially led by developed markets by the end of Q4, that is the December quarter, or the March quarter, that's Q1 of next year, is when they believe that these things would essentially do pretty well from here on. So that's what they are looking at, and that's what they are expecting in terms of largely the recovery that they say. Now, when you talk about credit card spends, when you talk about restaurants opening up, when you talk about initial frequency data, they believe that most of it in US as well as select European area is looking good. Most of the economies are actually coming down from a lockdown phase, and that's why they believe the opening up in June is pretty strong. Yes, the numbers should moderate ahead because April and May was of course a base effect where the activity had just halted. So in June, it's looking pretty strong, but they still believe that growth essentially would continue. Now, the key risk that they say is the global COVID cases that continue to rise. So they believe that again prompts people to think that there could be excessive lockdown, but they believe that policymakers will have a tough time because at one time they'll have to maintain the economic activity, and on the other hand they'll also have to fight and control the COVID cases that are happening. And so both these are slightly difficult in terms of scenario, but they at Morgan Stanley believe that broadly a very, very strict lockdown across the globe is very, very unlikely. Things would gradually open up from here on, and probably things would start to opening up. Things will start to open up in a gradual manner. Continues to be their base case.
All right, thanks for that, Pankaj. The latest note from Morgan Stanley, obviously quite upbeat, still suggesting that a V shape of sorts might continue to occur. But with that being said, let's get on board both our guests, Kunal and Shaina, both with us. Good morning to you both and welcome to the show. Kunal, I'll come to you first. It looks like a tremendous start to the day, and I remember you saying earlier on last week that 10,700 was another critical resistance for the Nifty. So now that we've crossed that, where are the new levels firming up according to you? And how much more do you see? How much bigger can this move really be?
So yes, good morning, Varun. In that regards, 10,700 was the first level of target and the first level of resistance for the index. We managed to scale past above it, at least on the cash basis. But I think there are still a lot of factors or a lot of market internals which the indices or the overall markets have to tick off. We are still not seeing a very strong market breadth breaking into a resistance. There is still an on and off move into individual stocks. You don't see consistent move. For example, look at ICICI Bank today. Look at Kotak Bank today. Many of these stocks are struggling. So even though the Bank Nifty is up 400 points, these stocks are not seeing not seeing such kind of a strong Rara kind of a movement as one could probably have anticipated and expected, since the fact that you're trading at multi-week highs on the indices. So I think that regards that zippy factor is missing for our markets. But nevertheless, I think in terms of Nifty levels, I believe now the supports have risen to 10,500. So look at it this way, that if the markets keep on going up higher, you just have to trail your stop losses as a long trader, and then ride the trend on the upside. So 10,500 is now, I believe, very crucial short-term support for the Nifty. So till the time we don't break that level, I think the chance of this trend continuing is pretty much on the higher side. And the resistance now on the upside for the Nifty now comes to that psychological 11,000 mark. So 11,000 is a bit of a far-fetched stretch for the index to move from current levels because of the lack of participation. Also 11,000 is seen one of the higher amount of call writing as well, being a psychological and a round figure mark as well. So I think now one has to be more of a balanced approach. You have to keep on trailing your stop losses higher. So every 50 points or 100 points move on the index, you have to trail your stop losses higher accordingly.
Okay, Kunal, that's heartening to know how the market momentum is building up and important levels to watch. Shahina is also with us. Morning, Shahina. You have a list of buy calls. What are the stocks that you would like us to pick in the market, in a market like this?
Well, I think these are the sectors and stocks that everybody's talking of as of now. But given the market in terms of the upside, in my view, there is a limit. There is likely to be cap. So I would prefer to go with the large caps, which are in favor now. That is basically the telecom and pharma. Now, in the telecom, there are two stocks currently which I think anybody should have and everybody should have in their portfolio. One is, of course, Reliance, and the second is Bharti. Now, both have news coming in on the positive side. To start with Bharti, actually, Bharti has just last weekend, along with the UK government, won the bid for the OneWeb. I think that is a very positive, given the long-term future being satellite. I think when we have video conferencing that all of them are talking about, I think this is going to be a very important upside. Also, if you saw the last quarter numbers, I think Bharti did very well. Even Reliance Jio, given that the ARPUs were higher. Reliance, on the other hand, has actually become debt-free, raised a lot of funds, as we have all been discussing for some time. And I think it is very well positioned to capitalize on the growth coming in the future, both in terms of technology development as well as the mobile the mobile growth in terms of ARPUs as well as in terms of number of subscribers. So I think both these stocks could be in the portfolio. And pharma is the next sector, I think, which is in favor. And I do believe that given the negative sentiment that was there for quite a long time, there is a lot of upside in terms of incremental, I think, investors coming in and adding to the PE multiple going forward. I think on the ground also there are a lot of improvements, products being developed, launched in the US. I think the US FDA is becoming a bit more soft, slightly soft, and that was a major problem. So I think once these issues get sorted out, the Indian pharma is very well positioned to capitalize on the growth going forward. In this sector, I would like Cipla as my top pick. They have got a number of good products in the inhaler as well as oncology segment, anti-AIDS. They are very well positioned both in the domestic market. They have got a good pipeline of products. So I think if one has to actually pick up, the top pick would be Cipla, but I think a lot of other pharma stocks also look attractive at current levels.
Okay, what about you, Kunal? What are your trading ideas?
Well, I'll go with a couple of buy calls, but again, with a possibility that the markets can keep on surprising on the way it moves up. So have trailing stop loss mechanism, as I mentioned earlier. So two buy calls. First one is a buy on Siemens. Now that stock, which did extremely well on Friday, is now finally seeing a good follow-through up move, up by almost 2.5% so far. I think it looks attractive for another 50 rupees on the upside. So buy on Siemens with a target of 1240 and stop loss could be kept at 1150. And the second would be a buy on Tata Steel. I think many of the metal stocks are trying to make a good comeback. Tata Steel is also on the verge of a strong breakout about this 340 mark on the spot level. So maybe a couple of points from here, and a breakout of almost 20-25 points could be possible on Tata Steel. Hence a buy with a target of 360 and stop loss could be kept at 325.
All right, Kunal, thanks so much for those picks as always. Let's move forward now to our queries for this morning. We have our first query from Rochak Jain of Udaipur, and he has bought shares of Varun Beverage at 647 rupees per share, and he wants to know things from a long-term standpoint. So Kunal, let's keep it with you. How are the long-term prospects looking on the Varun Beverages chart?
Well, they look very attractive, Varun, frankly, because I think this stock has been a good performer in last 3-4 months as well, from those 500 levels to now 700 plus. And I think what's again more categorically positive for Varun Beverages is the way the stock has moved up. It's not been a flashy up move like a V-shaped recovery for the stock. It's been a very trending up move, so a pattern of higher highs and higher lows. The moving averages have also started to increase the slope on the upside. So earlier the 50 and the 200 moving averages were moving downwards, but because of the steady nature of up move, the averages are now starting to slope on the upside. So there's been a good reversal for Varun Beverages in that regards, and I believe that the stock should you should hold on to your investments over here. I think if you have a time horizon of even 6 months to 1 year, then I believe a possibility of 800 to 870, which was the previous high for Varun Beverages last 6-8 months back. I think that should be a fair enough target for the stock price in the near to medium term.
Shahina, do you concur with Kunal's perspective on Varun?
Yes, I do actually. I think, yeah, I do actually. I think there is, technically, of course, the stock does look good, and also fundamentally, I believe that the numbers actually, while maybe impacted in the first quarter because of COVID, and even maybe in the first half, I think the product portfolio, the clientele that the company has is very good. And over a 3 to 5 year period, I see a growth of about 10%, a CAGR growth of 10%. So definitely, I think the shorter term pain could be overlooked. And the numbers are improving all around. If you see the return numbers, return on capital employed is going up. The market share of the company is going up in the overall segment. So I think given the balance sheet also being steady, a decent balance sheet, one can continue holding on. I think 850 is something that one can look at with a year's target.
So the consensus coming in on Varun Beverages, both of our experts have given it a thumbs up. Moving on to our next email query, Siddharth Kohli writes to us, he's based in Delhi, he wants to invest in HDFC Life at the current market price. Kunal, the way the stock has run up over the last 3.5-4 months is phenomenal. It's once again back close to the 600 levels that was usually the norm for this counter pre-COVID era. Talk to us about whether or not it's a good strategy or it's a good idea to buy it at the current juncture, or should he wait for some dips?
So I think it should be both. You should start buying HDFC Life. I think now, since the fact that the stock will be now part of the Nifty 50 very soon, I think in that regards also it adds to a lot of quality to your portfolio. Also look at it this way, that the stock has moved up higher in a very sharp kind of a manner. So I think the month of March, or in the correction of March, the stock had come back to a 350, 360 kind of levels, and from there on, it's now almost on the verge of breaking 600. So there's been a good 70-80% rise in the stock price. So because of this last 3-4 months of this price uptick, there could be a chance of a correction. But just based on the last 3 months of price movement, I would expect that the stock should be a part of a bigger uptrend going forward. So have a staggered approach. Why not buy or start buying at current levels and look to average if the stock say comes back to a 500 or 520 kind of a support zone. I think that's a very good mean support for HDFC Life from a longer term view.
All right, thanks for that, Kunal. Shaina, what's your take on HDFC Life?
Yeah, I would again concur with Kunal. The stock run-up has been pretty sharp. At the same time, I think one can be buy it at intervals, as Kunal has said very correctly. Here, I think that the valuations at current 4 times EV is not cheap actually. At the same time, given the pedigree of HDFC and the potential, I think one can be buying the stock for the long-term portfolio. Basically, the company has been over a period of time trying to improve its product mix. They are offering a number of products. They have tried to manage their interest, the cost of funds. They are also managing various segments in terms of their business mix and other ratios. So I think one can be investing in segments and holding it for the longer term.
Okay, great. So even on a fundamental level, you concur with Kunal. That's always good to hear. Stick on with us, Shahina. Let's start the next query with you. Rajni Shah from Gujarat has written to us, and he's bought 100 shares of Axis Bank at 600 rupees and would like to know if he should continue to hold and long-term prospects. So how is Axis, how do you judge Axis on a long-term basis?
I think Axis is slightly more risky than, let us say, an HDFC or even ICICI Bank for that matter. But at the same time, the management has indicated that it is going in for fundraising. They have asked for, they are going to ask for shareholders note for almost 50,000 crore of debt raise. And I think when the balance sheet is strengthened, it will give it the wherewithal to actually overcome the near-term pain that is likely to come in because of COVID. I think a number of borrowers have gone in for asking for the moratorium from the bank. Also, in terms of the credit risk, I think we'll have to wait and watch as to how the situation evolves over the next couple of months. But I would also be holding it as of now, and probably if you want to add, please do wait and add it once the whole issue is sorted out in terms of the numbers and how it pans out. But I think the fundraise is a positive, and if it goes through, I think the stock should bottom out.
Okay, do you agree with Shahina's view? Should one look at adding more of Axis Bank given the way the stock has corrected, Kunal?
Well, I think I'll probably agree with the first part that Axis Bank is slightly high risk, as compared to many of these other private sector banks. So we've seen the price performance as well, and I think it's not just the last 2-3 months that I think Axis Bank has garnered such kind of a risk profile. But look at it in the last 1 or 2 years. I think I remember very clearly in 2019 when many of the banking stocks, especially the likes of ICICI Bank, was performing extremely well. Axis Bank had underperformed. So in the best of the times as well, and in one of the better of the times as well, the stock underperformed its immediate peer ICICI Bank. And in the difficult times of the markets where we've gone through in the last 3-4 months specifically, I think the stock has again been an underperformer in that regard. So I think it's better that you stick with slight better quality. I think ICICI Bank or even a HDFC Bank, I think is a better bet at current levels. And the market overall sentiment improves. So if you see data points on the fundamental side and the economic side improving, then you can add on to maybe an Axis Bank as the third or the fourth banks in your banking list. But I think it should not be your top priority bank at current levels. I would give more preference to an ICICI or an HDFC Bank.
Well, that's the verdict coming in on Axis Bank and other private lenders, which our experts feel are relatively more attractive at the current juncture. Thank you so much, Shahina and Kunal, then, for joining in with your views on the market and helping our viewers out as always. Thank you so much. Before we slip into a break, let's pull up that BNSN stock cloud as well, just to get a check on all the stocks that are buzzing in trade. I will start with an HDFC Bank, continues to be one of the top performers on the benchmark index. You had their Q1 update coming in over the weekend. Their advances are up 1%, deposits have grown 25%, and CASA has come in at 40%. So good numbers coming in. The market also seems fairly enthused with the performance that they've delivered in Q1. Edelweiss Financial, another stock in focus, which we also flagged off as part of our headlines. Firstly, let me address their numbers real quick. They've posted a loss of 2,200 odd crore rupees. Provisions have also gone up significantly higher. Provisions are up almost 9.5 times on a sequential basis and 20x on a YOY basis. 900 crores solely provided for COVID-related impairment, which was taken in advance in Q4 FY20. So the market is a tad bit concerned about the numbers that that they have delivered for the last quarter. Equity capital raise is also something that is in focus. They're in talks to raise about 1,000 to 1,500 crores worth of equity capital. It will be finalized over the next 6 to 8 weeks. Another stock buzzing in trade. Actually, buzzing is an understatement. Really soaring in trade is National Fertilizers. They've achieved highest ever fertilizer sale of 12.85 lakh MT in Q1 of FY21. So that's an update as well. That's keeping National Fertilizers very much buzzing in trade, flying in trade really. IHCL, hotel pack is actually in focus entirely. You had some commentary coming in from Maharashtra CM as well about reopening of hotels and restaurants. SOP will soon be out as well. M&M, top performer from the auto index, one of the biggest gainers in trade from the benchmark Nifty 50 index. JSW Steel as well, aiding the market rally. Marico, on the other hand, is sulking in trade, and so is Lupin. In fact, the entire pharma space right now is a tad bit under pressure. You have Ashok Leyland, one more name, one more performer from the auto pack that's aiding the markets. And lastly, you have CSB Bank, which is also buzzing in trade.
In association with Amul, the taste of India.
Your dizzying lifestyle needs investment ideas at lightning speeds. Watch Market Fatafat. Get 30 big stock ideas in just 30 minutes. Market Fatafat. Quick, crisp, credible. Only on ET Now. Rise with India.
How do I look?
Yeah, you...
Ah, forget it.
Wow.
Hello, MG. How do I look today?
You look amazing.
You've got a lot to learn.
The all-new 6-seater MG Hector Plus. It's a human thing.
Keep calm and stay invested. Tips by Mirae Asset Mutual Fund. Keep following your asset allocation. Keep cool in the face of volatility. Keep your goal in mind. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Fear, hearsay, uncertainty. It's time to shake off that doubt. You have our word, so let in the truth and let fear out. It's time to be sure that you can open your door. To get a copy of your daily newspaper, log on to wantmypaper.com. The Times of India. I want my paper.
क्या आपको इंडिपेंडेंट फाइनेंशियल एडवाइजर बनना है? आपको चाहिए होगा एक ऑफिस, स्टाफ, रिसर्च, रजिस्ट्रेशन और सॉफ्टवेयर। टेंशन हटाओ और ये सब कुछ पाओ विद AAA फ्रॉम IIFL सिक्योरिटीज। कीजिए इक्विटी में ट्रेड, ऑफर कीजिए क्लाइंट्स को मल्टीपल फाइनेंशियल सॉल्यूशंस और कमाइए उम्दा कमीशन। 360 डिग्री पोर्टफोलियो रिपोर्ट के साथ अपना बिजनेस भी ट्रैक कीजिए। आज ही IIFL.com/AAA पर रजिस्टर कीजिए और बन जाइए एडवाइजर एनी टाइम एनीवेयर। AAA by IIFL Securities. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Presenting the all-new Harrier 2020 with panoramic sunroof, 6-speed automatic transmission, 170 PS Cryotech diesel engine. Experience the thrill of power and the comfort of automatic. Harrier 2020. Test drive now.
9 to 5 job, arey 5 to 9 job, bhag daud, all the time job. The roaming wala job, the deadline wala job, or are you living in the market wala job?
Life is full of options. Choose a job and earn on your own terms. Choose to become an LIC agent. It's more than a job. It's career insurance. Be your own boss. Be an LIC agent. Ab life set hai.
Welcome back to Buy Now, Sell Now. In what's been quite an interesting development lately, a lot of banks have been coming forward with large capital raises planned. ICICI Bank is one such candidate, which was a board will be meeting on July 8th to discuss a fundraise that we last week heard could be as high as $2 billion or greater. We know that Kotak also just completed a fundraise plus share sale. We had heard that HDFC was exploring, but that seems to be a false rumor. But with that being said, there are numerous financial institutions in the last 1 month which have considered a fundraise. So this has had a dual effect. On some level, it's positive because people are assured that the banks will have enough capital. On the other side, it's also concerning because all these institutions have capital adequacy ratio well within the limits right now. So additional capital raise also spooking some investors, giving them cues that there might be a lot of pain ahead. Now, speaking of what lies ahead, HDFC Bank is the first one to report its Q1 update. The update does not have asset quality in it, it does not have provisioning in it, but it does have advances and deposits. So it seems that YOY, advances and deposits have both grown in excess of 20%, but that might be a misleading number as sequentially there's been just a 1% increase in advances and a 4% increase in deposits. So there's definitely been a slowdown. But that being said, even if you've managed to grow by a little bit in Q1, you can see the effect it's having on HDFC stock price. Investors seem to find it a very encouraging number. So the CASA ratio also at 40% has held its ground. Both YOY and Q on Q there's been a marginal decline, but still fairly decent. So all in all, that's what's keeping HDFC and ICICI in the limelight today. But daily or weekly, as we hear different fundraising announcements, also keeping the entire financial pack in focus. Karunya.
Right. Let's keep it with the financial space, and focus in on another name, that's Edelweiss Financial. The company, or rather the group, had booked a quarterly loss earlier in the day. We caught up with the chairman and CEO, Rashesh Shah, and tried to understand what their roadmap is going forward and what is the plan to recover in segments that have witnessed some amount of despair and pressure. Here's a slice of that conversation.
I think all the decisions we have made have been keeping in mind that, there is going to be a post-COVID world. We have to accept that we don't know when, but there is going to be a post-COVID world. And the idea is to use this time to become stronger so that when COVID gets over, I think after December 2020 is where we will see the post-COVID environment. And I think India growth story is still intact. We have put all the things on the ground. I think COVID will impact. COVID will have an impact on asset quality, and that is what we have tried to do. We have tried to estimate what the COVID impact is and also take it in Q4, though these are results for March, and you can argue that COVID impact is after that. Our board and audit committee decided that as much as we can anticipate, as much as we can do that, this is a good time to do that. And fortunately for us, because you would have seen last couple of years, we've been degrowing our credit book. Our borrowings have come down by almost 14,000 crores. So we have a lot of excess equity, and having such high capital adequacy in a time of this is not a good thing. So we might as well convert that extra capital into impairments. So these have all been impairments that we have taken, keeping in mind the growth. I think growth should come back post December 2020. We just have to see, and I keep my fingers crossed that we don't have a wave 2, we don't have a lot of economic impact. June has been a good month from economic recovery point of view, so I keep my fingers crossed, and I do think that India will come back. We just have to tackle this crisis at the utmost.
Yeah, and learn to live with it perhaps as well. You know, Rashesh, this is really the season of fundraisers, and you also are joining the bandwagon. I understand that you're looking to raise about 1,500 odd crore rupees as well of equity capital in wealth and asset management. Share with us some details if you have. What is the kind of investor interest that you're seeing? And more importantly, how is it that you're going to utilize the proceeds once you do raise these funds?
So as you know, Edelweiss is now into 4 businesses that we have been structured. One is our credit business, which is well capitalized, which is facing headwinds. In fact, the problem in credit is not equity in that business, but more borrowing, because liquidity has been dry. So that is why that business has not grown. And the impairment and asset quality impact also we have taken in that business. Our asset and wealth management business has been growing well. In fact, ironically, this quarter, even April, May, June, has been good for asset and wealth management. I mean, I'm sure you must have seen a lot more people rejigging their portfolios. People are trading equities a lot more. We have added a lot of new customers. We've added new assets under advice in this quarter. So asset and wealth
management. There you have it. I forgot to mention earlier that Edelweiss is also now the next member of the list of financials that is looking at a fundraise. But switching gears now completely to the auto sector, Rajiv Bajaj said a lot to ET Now, well, specifically to my colleague Utkarsh, and the broad lines of discussion were propagating an enforced lockdown serves no purpose. The workers' union explicitly acknowledges that shutting the plant would not be a solution. This is obviously the plant that's been in focus on the back of the COVID epidemic at Bajaj Auto. The company union wants production to continue uninterrupted. Social distancing norms and other precautions need to be followed more strictly, and COVID cases are increasing at an alarming rate across India. So Bajaj Auto cannot be unaffected by what is happening around us. But let's now go across to Utkarsh for more.
Amidst reports of over 250 people being infected in the Aurangabad plant of Bajaj Auto, and reports of 9 people succumbing to death due to coronavirus in the working in the plant. Now Rajiv Bajaj has come out with a statement. Rajiv Bajaj has spoken to us and said that many of the Bajaj Auto employees have been infected, have not picked up the COVID virus in the plant but outside the city. He in fact goes ahead and says that he believes that the safest place in the whole of Aurangabad is the Bajaj plant. He says that the worker union acknowledges the risk at this point of time and the cost of shutting the plant. He says the worker acknowledges the shutting plant is not a solution to stop COVID-19 infection and wants for production to continue interrupted. So really putting aside all the talks of a tiff between the management and workers at this point of time. They've also said, he's also gone ahead and said the social distancing norms and wearing of masks, among other precautions, need to be followed more strictly in Aurangabad and other parts of Maharashtra as well. He's also gone ahead again saying that propagating the vicious cycle of an enforced lockdown on the Valuj industrial area will serve no purpose but to seriously disrupt of our people both economically and emotionally. So clear, the statement from Rajiv Bajaj is clear. He's sticking to his stand that the production will continue. Speaking about a tiff between the management and the union, I got to speak to the union and honestly they are not in a mood to really go on and take some harsh steps against the management. They had gone ahead and requested the management for the same, but when we spoke to them, they're also speaking the tune of the management, saying we want to work, we do not want to sit at home, and going ahead. Also, what we were looking at, or what we are looking at this point of time, is simply an 8-10 day lockdown, not an enforced longer term lockdown. But on the other hand, the company is simply saying that the work will.
All right, Utkarsh, thank you so much for bringing us that very important update from the Bajaj Auto facility. But on that note, let's slip into a quick break on Buy Now, Sell Now. Plenty lined up when we come back. Welcome back to Buy Now, Sell Now. Let's once again pull up our BNSN stock cloud for this morning. Let's examine what's in there today and the various reasons for which these stocks are active. HDFC Bank, I think that's self-explanatory by this point. It's been discussed enough. Really good Q1 data on advances and deposits as well as CASA, keeping that counter really upbeat this morning. Edelweiss Financial, the next one to join the list. We just showed you our conversation with Rashesh earlier. That is a combination of fundraising as well as results being a bit of a dampener today. Then you have a National Fertilizers on the back of the fact that they achieved their highest ever record sales in their fertilizer products. And that's a PSU up around 14% today, so amazing reaction from the street. India Bulls, housing, that's obviously again on the back of the results, the fundraise, the ring fencing plan, which was an ET Now exclusive, so that counter continues to remain in focus. I think we then have a bunch of select recovery stocks, M&M obviously on the back of the strong commentary in tractor, rural recovery. You have a JSW Steel looking upbeat in a steel pack. You have a Marico, which is also rural linked but also urban. You have a Lupin, which is really one of the specialized pharma players that should stand to benefit in the near future. Ashok Leyland, again, if you're betting on recovery and movement, a key player. And then Catholic Syrian Bank, which has been quite unnoticed, but one should remember if you look at Muthoot and Manappuram, this bank also has a very large gold loan book. And looking at where gold is and the way the bank has performed, could be some upside there as well. Hence, it's made its way into our stock cloud for this morning, Karunya.